Welcome back. You're still watching Fin Week Money Matters. It's been a week. We've seen opposition parties walk out of the President's State of the Nation address for the first time. But the markets, they seem to have brushed that off with the JSE up in the morning trade. But in studio with me to discuss their top picks in the current market environment, we have Malibongwe Ntlokwana. He's a dealer at Momentum Asset Management, and Stephen Meintjes. He's the head of research at Imara S.P. Gentlemen, thank you. And of course, Yana Marais is still with us at the desk. Stephen, let me start with you. Record levels yesterday. Is this something that you can, maintain? A lot of people and investors have been worried that the market is just too expensive before we start talking about those stock picks.
Well, absolutely, it is no longer cheap. I think the S&P 500 is the one that the world is watching, and that also is no longer cheap. It's had a 5-year run, which we've tended to follow. And so I think the S&P is probably going to go sideways this year.
So we've seen it. What was that? Yesterday they had one of their best performances for the year. So they always talk about the JSE and that close correlation. Yes. So we should watch that. Malibongwe, let me come to you. Stephen is saying, yes, it is expensive, but you have identified a couple of stocks that you think there is some value there. Retailers, Steinhoff caught your attention.
Yeah, what Steinhoff is actually one of our biggest retail holding. We've been at Momentum Asset Management, we've been very bullish that particular stock, and I think what we like most about it is the bigger picture that management has taken in terms of the view of what will happen in Europe, etc. What tends to happen is that Steinhoff, you'll know, is a big retail sort of furniture giant out in Europe. It spans across Germany, France, etc., selling furniture. And what these guys have started doing is looking at privately run companies, and they're going out there, they're buying those companies out, and that's an instant increase to market share. And then because of their size, they're going outside and they're saying, you know what, they're going to the suppliers rather, and they negotiate much better prices because they'll be buying much more now because of their size, which spans across of Europe. And then, I mean, there are other things that are attractive about the stock, and we know that one of the biggest deals last year was the acquisition of the Pepco, Pepco a bit from Christopher, and that we believe that it was a bit, they overpaid for it, but you're not going to be getting good businesses for free. So we understand the premium that the company paid, and we understand management's bigger picture in the whole thing. So we're happy with that.
So you're also buying management. Yana, do you have any questions with regards to this?
No, I'm actually saving my questions for Naspers because I know that's also coming up.
Before we go to Naspers, let's look at another retailer. Stephen, you've looked at Woolworths. They were out with their numbers yesterday. Markets clearly loved that. What was up more than 5% yesterday?
Well, absolutely. I think it showed that the South African operations are, well, they're doing perhaps a little bit better than on the clothing side than some of their peers. And I think the market is beginning to get confidence that the Australian acquisition will work. Clearly, there's been a lot of apprehension as the share price has moved in line with the sector. But I still don't think the market's pricing in the successful rollout of Woolies products, systems, and lines and brands into Australia. And if that works, then I think there's quite a bit of legs in the stock.
And so this is one definitely to buy into.
Well, I think you've got to take a view. Are they going to succeed? And bear in mind, not all South African retailer forays into Australia have worked. But I think if you take the view that this one is going to succeed, then there's value still.
Just throwing one in there, a lot of people are loving, I know they're not playing in the same market here, but they always talk about how great Mr. Price is. If you look at Mr. Price and you look at your Woolworths, would you still be better positioned to be putting your money in a Mr. Price versus your Woolworths?
Yes, on my argument that the market's not pricing in the completely successful rollout in Australia. Mr. Price has been absolutely superb, and it's a very hard act to beat.
Let's go into the industrials. Yana, I'm going to leave this to you because I know you want to hear from Malibongwe.
Yeah, thanks. I mean, I've been watching the Naspers share price for a while because Naspers is also my boss. So, and the thing that fascinates me about it is that people keep saying, oh, it's overpriced. It can't possibly go any higher. You should cash out now. and you're trading at a PE of 93 or 95 or something, and yet the stock keeps rising. And I think similar to the Apple stock price, and we saw that, you know, when Tim Cook took over, oh, this is going to the dogs, and it's up 100% since he took over. Why are you still feeling bullish about Naspers?
You mentioned quite an interesting part in your question, where you said I actually work for Naspers. Things like that are actually not in the Naspers price as you see it. The chunk of what you're actually buying is a little stock in China called Tencent, and investors aren't actually looking at things like yourself, businesses like who you work for, etc. And so there's value that's locked into Naspers that's not being looked at, and investors are looking at Tencent. Now the reason investors are doing that is you know, I met the CEO of Bit of Buy on my way here, and he was going on about how people are actually migrating to using their mobile, and that is one of the biggest beneficiary and the most well-placed player in this market. That is Tencent, that is, and Naspers is actually a large, more than 85% of Naspers is actually that Tencent, and so you've got that benefit from their cash cow, if you will, and if you get caught up in the fundamentals of PE over 95, I've been working at Momentum Investment now for such a long time, and people have been nervous about the stock at around the 600 level. We're talking 1,600 Rand now, and we've been comfortably enjoying the ride. I don't think we are in a tech boom or anything like that. We're just relying much more on our cell phones now. In fact, I think it's more difficult to communicate, to do a whole lot of things now without your phone. I'm sure you understand that. So and that's the benefit.
So if I had to give you an option, buy, hold, or sell, would you be looking at a hold with Naspers? Okay,
right now we're comfortable where we are, but I mean, if you're keen, you've got a couple of cents that you want to spend, or other thousands, then obviously, I mean, it is your best to pick.
So we've moved from retail, we've looked at industrials. Let's look at the mining sector, Stephen. We've just had the mining Indaba. A lot of things came out of there. Still a little bit, some question marks, uncertainty, regulation. But you've looked at resource stocks, and there's ones that you'd like to chat about.
Well, the two that I was looking at were, of course, not the ones that would have been affected by the announcement that wasn't made last night, namely the strategic minerals. At least I don't think platinum and gold would have been declared strategic. So Northam is let's talk Panaf Gold first. I mean, that's a good old-fashioned gold mine, in fact really old. I think it's more than 100 years old down at Barberton. And it's a good dividend payer. You can actually buy, they kept paying good dividends right throughout the boom.
And that's extremely rare, especially for a gold miner.
Absolutely, yes. And this, when they made an acquisition, I think the market was apprehensive of the Evander acquisition, but we believe that's a good solid one. And I think it's out of favor at the moment because, you know, all the other gold shares are run. This one's down a bit, and that's mainly because they're operating in a low-grade area and will for another few months. But later on this year, they move into a high-grade area, and then you'll see the profits rebounding. And I mean, it's a good, solid long-term. If you think there's a need to have a gold hedge in your portfolio, that's a good one, without the risks that you get if you take a more marginal one like Harmony.
Stephen, let me just jump in there. You mentioned that it's been a good dividend payer, and a lot of the resource trends that we've been seeing is pulling back on capital expenditure, and we're also seeing some of the mining companies not paying a big of a dividend. Is this something that could start to impact that particular stock, where you have been looking at a dividend as the investment case for what you're doing going forward? Or can we still expect the same type of payout?
Look, there might be, as a result of the mining plan over the next 3 or 4 months, it might impact the dividend temporarily. And of course, if the gold price, it will be gold price sensitive. But I mean, your margin of safety with costs compared to current gold price and compared to some of the peers is so healthy that it just makes it. And they've got some very high grade blocks down at Barberton that they can always resort to, if the gold price really does tank.
I must just talk about Valentine's Day is tomorrow. A lot of people are looking at checking into hotels and doing all sorts of interesting things, which brings me to the next stock pick that you've looked at, Malibongwe Sun International. So
now that, to be sure, has been one of the greatest turnaround self-made turnaround story that I've seen in a long time. Management came over to a couple of analysts. They did a roadshow, and they told us about this big game plan that they're trying to unlock value in the group, and they just don't re-look at a whole lot of that's been happening and what hasn't been working and try to get rid of that. And what these guys, I mean, they're in the hotel and the gaming in a sector. And if you look at the gaming area of their business, that is in a market where gross gaming revenues are up 6 to 8%. 2 years ago, you'd be lucky if you were the actual owner of a Monty, you were going away with 2 to 3%. So they're in an environment where people are actually, they are making money by people being there, and people are also winning, but they are the bigger winners in the end. And just from the hotel side of things, occupancy rates have started increasing now. You've mentioned what is a Valentine's? I thought I'd throw in a red there just for yeah, so occupancy rates are improving, and then there's this big LATAM drive that they're trying to embark on. They actually took a couple of guys to South America, Argentina, Chile, etc., and the amount of work that they plan to do there in terms of revamping their presence there and actually becoming a bigger force, it's great. And that is what we are actually buying into when we talk Sun International. We're very bullish the stock at Momentum Investments, and at valuations of 13, 14 times forward, we're happy going in there.
Final question
from
you.
Online gambling, would that be a huge threat to them? Are they concerned about it?
Exactly. So that is one of the key risks. One is the delivery on this LATAM thing, and then this LATAM strategy that they're on about, and then online gaming. I mean, people are now, it's going to be Super 15, it's Cricket World Cup, and people are just putting bets on their phones and they're hoping for the best instead of going to going to the actual casino and doing tables and slot machines, etc. So it is an emerging competitor in a way, but these guys are sharp. I mean, they're very forward-looking. They can see that. If you and I can see that, I'm telling you now, these guys have already looked at such things.
Lady and gents, thank you so much for joining us this afternoon, telling us about the different sectors. We've moved from mining to retailers to industrials and even the hospitality gaming industry there. Thanks to Malibongwe Ntlokwana, he's a dealer at Momentum Asset Managers, and Stephen Meintjes, he's the head of research at Imara S.P. Reid.